Hey everyone, this is DayTraderRockStar, and bringing you a little update video for the next week, the week of January 16th. We have a 4-day weekend. On Friday we left off with the S&P downgrading 9 Eurozone countries, and that leaves us off with, seeing how the market opens up on Tuesday. And I think this was kind of expected. It was kind of rumored. There was rumors about it. They tried to move the market as the volatility wasn't really there when you heard the rumors come out about the euro downgrades. And they kind of hinted to it in December, and the market's been kind of grinding up since then. So you got to feel that the downgrades were kind of factored in. We're not going to know exactly until Tuesday how the market opens up, but I want to take it as a down. If we do get any pullback, not too severe, a little gap down is an opportunity. And again, a 1300 above us still lingers above us and still using as a nice magnet. But I think this, just seeing how we react off of the downgrades, the S&P downgrades, Tuesday is going to give us a good clue on which direction the market really wants to head. Again, I want to just let you know, my view is that we absorb that and we move higher. Now, a lot of stocks are setting up. A lot of big industrial stocks are still in a basing pattern, and some of them starting to break out. Some of them haven't broken out officially yet. And it feels like the market has been moving up here steadily. I'm going to take a fast look at the S&P cash, SPX, and you can actually see this slow grind here. And we had this little candlestick on Friday and then reversed, and we kind of closed pretty good within the range, but we kind of dipped down. So we're going to see what happens Tuesday. We get this fake out and then a drop down. Again, we were overbought on most of the time frames. Daily is embedded. 60-minute was embedded, which continued to show actually the daily was embedded. The 60-minute now was very choppy. We kind of tried to break down but crossed back over to the upside, and not really giving us a clear signal. And the 15-minute, again, this one is a little better on the bounces. If actually, if you look at the stochastics on the 15-minute chart on the S&P cash, you can actually see it really does give you some good exit and entry points based off of the short-term momentum. So I use this a lot when we trade the futures. I actually use this as a referral. I always want to have my time frames line up as best as possible, and that's what we're going to talk about tonight. Is actually the layering time frame layering indicator, where it's part of the high probability methodology, where we're taking the best opportunity in the market. And this is going to happen across different time frames. So we have a daily time frame, a 60-minute, 15-minute, 5-minute, 1 minute. And if we could actually get everything to line up on each individual time frame, then you have your exact entry, versus seeing this set up on a daily, but not knowing if you want to get in at 10 o'clock or 2 o'clock. There could be big moves in the market, but it's important, and sometimes the signals will not work out in one day. It'll take a couple days sometimes for a stock to bottom in that level and get through a certain level before heading in the direction that you're trading it based off the signal. So that's what's good about the layering of the effects. The more you can layer the time frames on top of each other, the higher probability that setup is going to be. So that's terminology you hear me use a lot on DayTraderRadio.com, and that's what we cover. That's what the methodology is. That's what we identify. That's what I identify every day during the day. So these are some of the setups going into next week. And actually, I want to start off with VALE, because VALE gives a good on the 10 for 1,000 watch list that went out this week. I used VALE as an example of the time frame layering effect of the trigger. And we're just going to zoom out here a second. I want to go out to the 60-minute chart, and you can see that VALE has this upward channel, and you can see that 60-minute time frame here pulling back into an oversold just recently. So this is actually setting up. We're in a recognizable pattern, and what I'm doing here is I'm just actually identifying other times that this happened. It happened on 12/26, and it happened on January 6th, and also happened back here on 12/19. And you can go back and back test these and see the important levels. So you can actually look at these levels and say, all right, these are a high probability setup for a long. usually when it gets down to this level, I have a better shot of a trade upside. So that's, and you have the biggest move. So it's always, kind of, you always want to have that in your favor if you're going long, or if you're going short, have it up into an overbought level. Because the trend was typically up, you look for more of that, you look for the reactionary pullbacks. That's the type of trade I like to do, is buying quality stocks on the pullback in the trend, and this works great for that. So again, you find that on the 60-minute chart. Actually, you also find it on the daily. You start off with your daily, and you can actually see there's a nice downward channel here. So this is a very good pattern that I'm playing to the upside. But remember, from the daily to the 60, you see two different patterns here. You have an upward pattern inside the daily, so you're really trading off of this little level here. So as you go out on time frames, you get tighter on time frames, your trade time gets tighter. So again, in the VALE, you don't want to be stuck in a stock here November 25th and happen to have the same price January for 4 or 5 months. So what we're going to do is we're going to take these time frames and we're going to chop them up, and we get tighter on our entries and exits. So we go, instead of using the daily, we go to the 60. And if the 60 is setting up, what we want to do is try to look at the 15-minute and get a better idea of how the 15-minute sets up. So we can look back at the 15-minute at those recent setups, and I have the time frames there too, 12:30, and that one was here. There we go, 12:30, and this one was 3:15. And each one of these 15-minute stochastic setups pulled back into an oversold level. But even though they were pulled back here at different times on the 15, sure, they give you a little bounce. They give you a little bounce here, give you a little bounce here. And these are other areas that pulled back, from here to here, from here to here, from here to here. The areas you really want to pay attention to are the ones that pull back here, here, and here, that overlap the daily that's pulled back, or excuse me, the 60-minute that's lapped off. So if we looked at this time frame at 12:29, at 3:15, and at January 6th at 2:30, and again at this Friday 13th, last Friday, each one of these setups were setting up both on the 15-minute and on the 60-minute setup, on the 60 minutes. So they usually gives you a better entry there. The better entry also gives you a bigger move in the stock overall. So from that point on, you have a nice move. From this point on, you have a nice move, and this one's just starting to head up right now. Again, this could change very fast, but because of the higher probability, because of the multiple time frames here we have here, this becomes a better risk-reward trade. We've taken 2 time frames, and what you want to do then is take it down one more level to the 5-minute chart to really get your exact entry. So you want to have the 5 minutes set up before you take that entry. All right, and if you could go back to your levels where you were looking at before, again, the 5 minutes also give those micro bounces too. But again, when you're talking about trading the markets, you rather get a signal. You don't want to just take a trade really from 22:30 to 22:45. If you get at that, that's what this 5-minute range bound indicator is telling you right now. It's only giving you those little movements. It's not bad for hyper scalping and stuff, but that 15-minute will give you a little bigger moves. When it gets oversold to overbought, you could get a little, instead of getting a 30-cent move, you're getting maybe a 50-cent move. In this case, you're getting a 90-cent move. So that's all based on the 15-minute, and then on the 60-minute chart, of course, you're seeing some moves here from overbought to oversold. You're getting a nice move here, 21.71, to possibly, we're just going to actually call it here 24.60. 24.60. So you're looking at 2-3 point moves now on the 60, and again, it goes out. So you really tighten up the trade. You get your profits much faster, and you really take the risk out of the trade. So that's the focus of this week's watch list video. And it's so important to let the trade come to you. This is such an important rule to be successful, is to, unless you see that perfect setup, anything less is taking a little more risk on the table. And if you want to do that, go right ahead, but there's a better way of doing it. The better way is letting things come to you, setting everything up properly, letting the indicators work for you, taking the risk-reward trade. You know, it's just like anything else. Yeah, it's anything else. If you're going to be successful, you have to take the odds in your favor. It just cuts all the BS out of it. Everything else is BS that you learn. You know, but this is basically, you know, it's just taking the risk out of the trade. You're taking the best odds on the trade, and you let it run. We all know the market's manipulated in its own way, and we have no clue what news could come out from one day to the next. So basically, you know, you're dealing with a kind of a casino right here. There's a chance of anything can happen, and chance is not what we want. You know, we want a game of skill, basically, not chance. You know, we want to be able to trade these. So what we at least doing is taking the that luck factor, or taking the risk out of it as much as we can. You know, there's going to be events out there that the market gets hit by, those black swan events, but besides that, this is going to give you the best opportunity to make money in the market, long or short, or both sides. All right, multiple time frame triggers, layering. Sorry, look at my triggers. Looks like I spelled that a little too fast, and I went out on the other side of the thing. Apologize for that. Tiggers. Wonderful thing about Tiggers. All right, so that's the VALE. Give you an example of a trade I'm in this week. Dominion Resources. Nice oversold on the daily. Nice underlying trend line. A very strong stock that's pulled back. And the daily setup and the 60-minute setup on the 13th, you know, actually the 13th, were set up. So basically a 60 daily setup. It's usually considered a high probability setup. And from that point on, we're also looking at this downward channel line. And from that point on, we're going to look for that breakout to the upside. So the daily looks good. We had a nice, interesting candlestick. That should be in play this week. And the symbol is D on that. Let's take a look at one that's on the 10 for 1,000 watch list. Now, the 10 for 1,000 watch list goes out to the members of the site. And that consists of 10 high probability setups, or as close as we could get to high probability setups, and the kick-ass trades of the week, which are the best of the best, and the ones that I personally also jump right into. ARM Holdings, ARM. Look at the beautiful, you know, how this really reacts well. We're pulling back into this oversold level. Buy trigger $25 to $26. We're giving a range here because, again, if we could see a gap down early this week based off of some whatever news, this should bring us down into a daily setup on the daily, and it also should bring us back set up on a 60-minute stochastic setup, and also the 15-minute setup will be setting up perfectly. So ARM Holdings, a fantastic setup. Should be set up probably by Wednesday, and we'll be discussing this a lot on the show, and we'll be trading this one live also. So this was a really nice setup. Again, not 100% setup, but you know, we have such a good recognizable pattern. Everything lining up. It should be an HPS setup. Dr. Reddy was the stock that we've taken over the last weeks based off the patterns, and again, this one I just want to review because it was just an important stock to trade, and you can actually see the downward channels. And why did I get back into that one after such a long time? Is because I'm used to trading this stock into this type of pattern. So when I recognize a downward channel, I jump in it knowing that there's going to get the upside move. And we were set up on the daily, we're set up on the 60-minute stochastics right here. Everything was all measured out. We had the channel measured out on, you know, we had a recognizable pattern. We had an underlying support line. We had a lower trend line support, and we had underlying support too. Just a massive, everything pointed to an up breakout here. So the RDY was a perfect breakout. Now you can see that the 60 minutes come back into play on this, and so it'll be on the watch list for this week. It did pull back. It should give us, you know, we'll see. The trade's already off. We took profits into that. Again, it's always about having your, you know, your profit target set, you know, and if it's you know, I kind of stress not putting that monetary profit point in there because that kind of forces you sometimes to stay into a stock longer than you should. You know, not every stock is going to give you a measured move, you know, area, And you know, the more you stick to those whole numbers, the more chances you're not going to get that number you want. So what I do is, you know, we look for our indicators to tell us to get in. We also look for overbought or areas, not even questioning it, just getting out. You know, you have a nice profit from your entry to the, you know, and even if it went higher, you know, it doesn't matter, because you can constantly do this. 80% of the time you're going to make money, instead of, you know, waiting to see what happens, or you know, gambling. You know, it's very important that you have an established entry. Let everything come down to you, multiple time frames, not just the 60 but the 15. Again, everything lining up perfectly, and it gives you that perfect setup. And that's actually how we took the Dr. Reddy off of that. Dr. Reddy was a perfect setup. SOA was another one. SOA past week. This was actually a channel, you know, a nice little breakout. Inverted head and shoulders, small cap stock, which was nice. Dunkin' Donuts, Rovi, FedEx, Polycom worked out. DuPont was last week's kick-ass trade of the week. Now, the kick-ass trade of the week represents on the watch list what the number one indicator is, you know, the best, highest ranking stock that looks to be a successful trade. That's what I classify as the kick-ass trade. And usually it's the one that has the best indicator setups. Everything is quality, and it just seems like the perfect setup. So DuPont was that last week, and you could see from the setup here, the high probability setup in the recent breakout here. The 60-minute chart really came into play. Right here, and this is what caused us to, you know, that pullback right here was really your entry level. You can actually see this upward channel playing out, and each time a pullback on the 60 was really a great entry there. We actually took 2 trades in this, and yeah, at this point now it's a little overextended, but it just shows you how important it is to let those trades come to you and see how that 60-minute just rotates in. And another good setup for this week is Colgate-Palmolive, believe it or not. Nice downward channel. 60-minute chart just gave us a higher probability setup, because the 60-minute and the daily were both set up on a trend line. All right, so that's another one. But again, I'd go over all these each and every day live on the air. So if you want to see this live in action, live action, as the Turtle Man would say, join me at DayTraderRockStar.com. Each and every day, starting at 8 o'clock in the morning and going to the market closes and beyond, and all the other special shows we have out, educational shows during the week that you know, we continue to bring to you. So that's it. I hope you enjoyed it, and I will talk to you guys Tuesday if you tune in. That's DayTraderRockStar.com.